What's up, everybody? Welcome back. So today in this video, I'm going to show you a couple different option strategies that are going to make you a lot of money. And these are actually option strategies I'm using myself. They're a lot more safe than the usual options that a lot of people talk about. They're really my favorite strategies that I use a lot. And I'm going to show you exactly the different tools that I use and the different strategies I'm using myself right now in this stock market where it's super volatile that I'm making money on myself. Okay, so without further ado, guys, let's take a look at Palantir first of all. Okay, so Palantir is a stock that has been hammered quite a bit in the last couple months. If you take a look at the 1-year chart, it's gone down from its all-time highs of 20-something dollars all the way down to $8. And one of the tools I really like to use is just the moving average Bollinger Bands that you can find on yahoofinance.com. And if you take a look at, you would go into Yahoo Finance, you type in Palantir, and you would take a look at charts, and then you would go into Bollinger Bands. Okay, so you can see the moving average, and basically in a nutshell, what this tells me is that Palantir is trading below the moving average. Okay, so generally speaking, this is a pretty good indicator of how much the stock would trade at any given price. And as you can see right now, the moving average of Palantir, the price should be at about $9. Okay, so it's not a perfect indicator. It's not 100% correct all the time, but from my experience, I do find that this works pretty well. And this is just one of the first tools I like to use. So right now, Palantir is trading at $8, so it's below the moving average. And so I'm going to take a look at what options I can do with Palantir. So I'm going to go to my Robinhood account, and I'm going to sell a put option. Okay, so sell or write a put option. This basically just means that, okay, so if the stock falls to a certain price, I will be forced to buy 100 shares of that stock. Okay, so with Palantir, if I sell a put option right now to $8, I can collect about $44 off of every contract. Okay, so this is expiring less than a month out. Okay, so that is great in my opinion because you're collecting almost about 5% on your return. And if you open up 10 contracts, you're earning $440 off of collateral of $7,500. Okay, so $7,500 is not a whole lot. I know for some people it is quite a bit, but if you have $7,500 and if you don't mind owning Palantir stock at a cheaper price, then this would be a really good option. Okay, so exactly how this works is if the stock continues to fall for some reason, okay, so you would simply be forced to buy 100 shares of Palantir stock for every contract that you open. And at the point that you would have unrealized losses will be if the price of Palantir falls to $7.56. Okay, so at that point, you can either sell it or you can simply hold on to the stock, or you can sell covered calls, which I'm going to show you how to do later. Okay, so let's say if Palantir goes up. Okay, so if Palantir goes up to $9 to where the moving average should be, if you take a look at the Bollinger chart, then the only thing that happens is you simply collect the $44 in premium that you sold on this option. And if you open up 10 contracts, you would simply keep $440. So either way, guys, in my opinion, it's a win-win because you either get the stock at a cheaper price or you simply collect a premium. And that's why I love selling put options, because you essentially, it's really hard to lose on, especially if you're selling options on companies that you wouldn't mind owning, and especially companies that you wouldn't mind owning for the long term. Okay, so let's take a look at another tool that I like to use. Okay, so this tool is called insiderfinance.io. It basically follows in real time what institutions and hedge funds are trading with options. With Insider Finance, I was able to open up this trade a couple weeks ago on Bluebird, and I just saw that a lot of hedge funds were buying into Bluebird. They had a lot of call options, so I followed it, and I didn't buy any call options because I don't really want to buy call options right now, but I simply bought 100 shares of Blue. Okay, so as you can see, after that, it went up 32%. Now, is this a perfect indicator? No, right? Sometimes institutions may make mistakes or they may buy into a stock too early. We never really know. But in this case, it was a very big win for me. My portfolio gained about $179 or about 32%, which is huge. And on top of that, okay, so not only did I open up this position, I also sold a call option. Okay, so basically this is my second favorite strategy, and it is to sell covered calls. And basically what this strategy is if the stock goes up to a certain price, I'll be forced to sell that stock, assuming that I have 100 shares. Okay, so you have to have at least 100 shares of a stock to be able to do this option, or you can buy a leap option, which is something I talk about in my other videos. But in this case, I sold a call option out to $7.50. As you can see, right now blue is almost there. So if it does go up to $7.50, I'll be forced to sell all 100 of my shares. But at that point, I would have had a great profit. And on top of that, I collect premium. Okay, so I would collect $50. So guys, all around, this is a win-win-win strategy. If the stock had gone down, then I would simply collect the $50 and I would hold on to blue stocks for longer. Okay, so if you want to check it out yourself, check it out in the link below. I have a link right now where you can sign up for Insider Finance and get a nice discount. By the way, guys, one more tool I really like to use is Seeking Alpha. So I never go into any stock blindly. So I want to at least take a look at what other analysts are saying, what other people are saying. And as you can see, Seeking Alpha does a great job of aggregating or putting together a lot of different information written very, very well by a lot of great analysts or people who have studied different companies. And as you can see a lot of the articles that have been written about blue. So I don't just go into any stock blindly. I don't just take a look at their numbers, which I do all that, but on top of that, I just use Seeking Alpha to make my life a lot easier. Okay, so the last strategy I want to talk about is for smaller portfolios, and that is the put credit spread. Okay, so I'm going to show you the quick update of what Insider Finance sent me in the email, just to kind of give me a quick overview of all the stocks and all the unusual trading options activity. And one of the companies I saw that I really liked was, well, there's a couple of different companies, but so I saw FUBO, I saw Target, I saw this company called WBA. Okay, so I checked out WBA, and as you can see, WBA is Walgreens Boots Alliance. Okay, Walgreens Boots Alliance is not a company I've heard about, but I definitely was interested because of what other institutions and hedge funds are trading. And right now, guys, the PE ratio is 5.9. That is very, very low. On top of that, they pay a very nice dividend. I think this is a company that is trading at a very low valuation. If you take a look at the moving average, right now it's trading well below the moving average as well. Okay, so let's go into my brokerage account, and we're going to do trade options. I'm going to show you how the put credit spread works. Okay, so whenever you open a put credit spread, first you want to set an expiration. Okay, so I generally do about 2 weeks to 3 weeks out. In this case, I'm going to do September 30th, and I'm going to start with buying a put option. Okay, so buying a put option just hedges my position in case the stock falls too much. It's different than just selling a put option, because with selling a put option, you may have to own the stock, 100 shares of the stock. But with selling a put credit spread, essentially in its most simplest terms, is you're basically betting that a stock won't fall down below a certain price. Okay, so in this case, I'm going to open up the spread at $36, and then I'm going to sell a put option right above that. Okay, so as you can see now, I'm basically risking $31 to make $19. And how this works is, if the stock doesn't fall more than 1% by the expiration, September 30th, then I collect $19. If it falls more than that, I can close out my trade so that I won't have too big of a loss. Okay, so oftentimes this is a great trade, especially if you're bullish on a stock. So if the stock goes up, you would simply collect the $19. And that is great because you're essentially collecting more than 50%, almost 60, 70% on this trade if the stock goes in your favor. Now, the biggest downside or risk of the strategy is you have the potential to lose your entire bet. So let's say the stock does fall more than 1% and it keeps going down, then essentially you could lose all the money that you put into. Okay, so but that's one of the things that I also teach about in my videos is whenever you do see a stock falling much more than what you anticipated, you can actually close out your trade and not lose the entire $31. Okay, so that's the put credit spread. So we talked about selling puts, we talked about covered calls, and then we talked about selling put credit spreads. Now I want to talk about one last stock that I think has massive potential, and that is the stock FUBO. Okay, so FUBO, as you can see, did pull up on insiderfinance.io. There were institutions and hedge funds investing into FUBO, call options expiring 9/16 with a strike price of $7.50. So they are very, very bullish on FUBO. And let's take a quick look at what options you can do with FUBO. Okay, so FUBO is actually a stock that I found out about recently that does streaming, and they have a massive potential. They are not profitable yet, so they're definitely a growth company. Take a look into yourself. I'm not going to talk too much about FUBO in this video, but I do want to introduce the stock because I'm very, very bullish on this stock. And so what I did yesterday was I simply sold put options. Okay, so I sold put options to September 30th. Right now, if you open up a put option on FUBO, you can get about 10% return. Okay, so that means for every contract that you open, you're putting up collateral of $400, and you have the potential to make $41 off of every contract. So if you open up 10 contracts, that's $400 a month. That's $400 a month. And the only collateral you need for this trade, if you open up 10 contracts, is $4,000. And that's not even a month. That's like just a couple weeks. The thing I love about this stock is you can really do all three different strategies. So you can sell put options, you can buy shares, and then sell covered calls. So if I had, and I do have more than 100 shares, I can sell covered call. That means, if the stock goes up to over, let's say $5.50, then I can collect almost $50 on that trade, plus whatever upside that FUBO has up till $5.50. So that's 50 cents per share. So if you times that by 100, that's another $50. Okay, so you can sell put options, you can sell covered calls if you have 100 shares, or you can simply buy out shares. Okay, if you want to do the put credit strategy, that also works. Okay, so I can simply buy a put at $4, and I will sell a put at $4.50, and I will be collecting $22 and only risking $28, which is almost an 80-something% return if the stock goes in my favor. In other words, if the stock doesn't drop by more than 10%, then I gain $22 for every contract. Now, if you think about it, you can open up a lot of contracts on these. You can open up 100 contracts, and you can essentially collect $2,200 on this trade. Okay, guys, well, these are just some of my favorite option strategies that can make you a lot of money. If you like this kind of content, if you want me to make more videos like this, make sure to like, subscribe, and comment below. Let me know what you think of these strategies, these different stocks. Let me know if you have any thoughts on where you think the market is going to go tomorrow. Thank you so much for watching, and we'll see you guys in the next video.
With every start, we are born again. Open your heart, spend this time in your head.